Hello dear, welcome to my YouTube channel. In this video, my friend, Jenny, will explore grid trading on Binance Futures. She will also cover how to set up your own grid trading strategy and start trading daily without continuously monitoring charts. Alright, let's proceed.
Trading is a basic economic concept involving the buying and selling of goods and services, with compensation paid by a buyer to a seller, or the exchange of goods or services between parties. In the old days, trading involved the trading of just assets such as gold. However, time has changed to the extent we can now trade virtual assets known as cryptocurrency. The cryptocurrency market is an open market. While this is an advantage as one can take advantage of the market at any time, this can be challenging too. It's easy to think that an always open market will always have desirable trades when in fact, that is simply untrue. What it can mean is that there are fewer parts of the day where you can execute profitable trades. This can leave you staring at the screen and waiting for longer than you would like as a day trader and can be time-consuming, especially if you want to be productive with your time. Are you tired of waiting and relentlessly looking at the screen 24 hours a day? Then, you need not worry any longer. Binance is here to assist you along the way using grid trading. Grid trading can help you avoid this challenge when you have a good understanding of the market trends. Now, what is grid trading? Grid trading is a trading tool that automates buying and selling futures contracts at present intervals around the present price change. In this way, it constructs a trading grid. Grid trading performs best in volatile markets as prices fluctuate at specific intervals. How does grid trading work? Essentially, grid trading attempts to make profits on small exchanges. It systematically executes buy and sell limit orders that are predefined in a range to profit from price volatility. The more frequently market fluctuates within the price range, the more profit you stand to make. The main advantage of grid trading is that it allows you to trade systematically without forecasting the market direction in a ranging market. Grid trading tends to be more effective in a ranging market, but the question is, will it be applicable when prices are trending? Note that even in trending markets, volatility continues to exist, especially in short time frames. Prices fluctuate rapidly due to a surge in trading activity. Grid trading benefits from small changes and allows you to capitalize on increased market volatility. It is also convenient as it eliminates the need to place orders and monitor real-time market movements manually. Determining a reasonable price range is key to ensuring your strategy's profitability. This means that you need to be extremely selective on market conditions suitable for your strategy to avoid being on the wrong side of the trending market. Importantly, you must ensure the proper risk management measures are in place. Therefore, you must determine a suitable leverage ratio and set appropriate take profit and stop loss orders to avoid losses caused by market fluctuations. For example, if a sell order is placed, a stop loss should be above the top of the price range, and if a buy order is placed, a stop loss should be below the bottom of the range. It is important to ensure that your trading parameters are compatible with the prevailing market conditions. Especially in range-bound markets, limit orders placed out of range are unlikely to get filled and as such, cause missed opportunity. The grid trading parameters can be adjusted in real time according to the prevailing market conditions. Grid trading is ideal for novices who want to trade in a systematic approach. If you are an advanced trader, you will be able to manually customize and set grid parameters on your own that will help you profit from a predefined price range in any of the available derivatives contracts. Are you a crypto newbie and don't know how to set parameters to build your grid trading strategy? Don't worry. Binance got you covered. Binance Futures has built a set of recommended parameters to reduce the learning curve. These include lower price limit, upper price limit, and grid count. With the auto parameters function, you will be able to create a grid trading strategy with just one click. How to set up a custom grid trading strategy from scratch. After logging in, go to the USDM Futures trading interface and click Strategy Trading, located at the top left corner of the Binance Futures trading interface. Navigate to the right sidebar of the Futures Grid Trading interface. On the Auto tab, verify the recommended parameters and set up your initial margin. Once you have decided the amount of margin that you want to allocate to your grid trading strategy, click Create and confirm your grid order so the system automatically places buy or sell orders at the preset prices. It is worth noting that the recommended parameters are set in a neutral direction and arithmetic mode by default. Please note that the following situations may cause grid creation to fail. When you are currently running a grid trading on the selected symbol. When you have open orders or positions on the selected symbol. When you are under hedge position mode, please adjust to one-way mode. When you exceed the limit, the total quantity of working and limit-triggered grid trading is 10. Let's take the BTC USD Perpetual as an example. To begin, you can choose from two predefined modes. The arithmetic mode constructs each grid with an equal price difference, while the geometric mode constructs each grid with an equal price ratio difference. Select between the two modes to begin building your strategy. Next, set the number of grids and enter the lower and upper price range. The system will calculate the initial margin value based on your chosen leverage ratio and grid density. Please note a minimum initial margin is required to launch the grid trading system. Note that the denser the grid, the greater the corresponding initial margin. Please make sure that your available balance and maintenance margin is higher than the initial margin. And finally, click Create to create a grid order. When a grid trade is triggered, the system divides the asset price range into several grids. According to your parameters and sets pending orders for each price level. When the asset's price falls, a buy order is executed and a sell order is placed immediately at a higher price. When an asset's price rises, a buy order is placed immediately lower than the price as soon as a sell order is executed. This strategy sets you up to buy low and sell high. It allows you to make profits in volatile market conditions. To monitor trading activity, click the Working tab to find grid trading details. Click Grid Details tab to update the grid strategy or include a stop trigger. Lastly, click Enter to end the grid trading system. What are you waiting for? Start exploring grid trading today and never miss the opportunity to capitalize on market volatility from now on. If you enjoyed this video, please hit the subscribe button, followed by the like button, and pin on the notification bell to get more content from this channel. See you next time.